Hello guys, so today I'm going to give you some brief explanation on why it is hard to become profitable trader. I have this list of the videos. So let's first talk about the whole industry. So first of all, day trading is a one of the most difficult money making industries because you don't actually compete against, you don't have the competition like in business, like you set up a store on the street and then there's another guy setting up a store on the street besides you. It's more like you have to follow where institutional money flows, which means you have to follow the big banks, hedge funds, pension funds, uh, university endowments and stuff like that. And you just have to analyze the fundamentals in order to be able to see the direction of like of the the sentiment. And first of all, it's hard to even get the information for like this for shit, man, fuck, I don't know how to speak. Never mind. So the whole information in the trading industry, most of it's like approximate, or it's like fake basically. The YouTube, for example, the YouTube trading community is one big pyramid scheme, because a lot of people, especially those like gurus like TGR, ICT, and stuff like this, they teach you how to trade those concepts, and they're mostly all based on ICT. So all of those fair value gap, liquidity sweep, and stuff like that, which I also used to trade, not judging anyone who's new to this space. They're just all made to simplify trading concepts, and they're not actually based on real data and numbers. They're just like an approximate repeating history patterns of the market, which are very unconventional, because the market changes through time, right? And you can apply a repeating pattern from history to the current state. So you can't apply it to the present, right? Because market conditions can change day to day, and based on the political and geopolitical events and tensions, it is very hard to keep the track and the sentiment of the market. Because, of course, if you take something for history, history can be matched with the present, right? That's basically all the science you need to know. And then after people repeat and are becoming like minions of these ICT concepts, they're connecting with the brokers. So they're connecting with the brokers to earn from promoting them. Basically, it's like, okay, so you watch their videos and they will teach you some concepts, and then they will say, okay, now once you've learned and backtested, you can now open an account on this broker, use my promo code, and that's it, right? For the fund account, broker for the funded account is what I'm talking about. And basically, so at at brokers, it's like, especially if they're B-book broker, which doesn't send your data directly to the exchange, they're most likely earning from the spread on your trades and overnight commissions. I mean, part of this is theirs, and then they share it with their like promoter or advertiser, which is the YouTube account that you are watching. For example, TJR is promoting Alpha Futures. I don't think it's Alpha Futures. Something like that. I'm not really sure. I don't watch him anymore. But this is all this cycle: promoting and then going to the broker. They earn from your spread trades, and they most likely, if you're a losing trader, they most likely trade opposite from you, right? And this is the cycle nobody talks about. why it is hard to become a trader. Because first of all, most of people are stuck in this trap, right? They didn't even like see or get to acknowledge that they are trapped inside this loophole. Um, and if they don't make it with those ICT concepts, they just give up, right? They don't even like search for any new data. But what I've recently discovered, the order flow and liquidity heat map and fundamental analysis, right? It's like so much more to this. It's like the whole new world. Because when I was learning ICT concepts with DJR, right? At some point, I just realized, okay, there is no way this is like the only thing that's to analyze, right? Those fair value gaps, some little ticks in between candlesticks, right? It can't be that, right? It's just too obvious. It's too common to be like just to implement this in some sort of strategy, right? And also those liquidity sweeps, that liquidity, like this the theory that liquidity lies above old highs and below old lows. It's just absurd. I mean, it is true to some extent, but it's not always the case, right? Because if you look at the liquidity heat map, like Bookmap or something, you'll notice that liquidity is like mostly everywhere, right? And they just promote this ideology of, okay, liquidity is below lows and above highs because they have nothing, right, to prove. They eventually run out of evidences to show this is the case, right? So they just make this theory an approximate theory of the real market, right? Of the real market mechanics. But markets need liquidity, right? Markets will run towards liquidity, and they will try to stay in the liquid market for as long time, right? Because markets, I mean, those big institutions like to trade in a balanced market, because if they trade with such a big money, they need a counter participants to fill their order, right? They can just place a 10,000 contract order on Nasdaq futures in the market where there is like 10 contracts for every tick, because the imagine the price move. The price move would be like obnoxious, man. Like the price move would destroy the markets if that would happen. This is why banks search liquidity. They just want to spend most of the time in there. I mean, this may work on like the interest. I was just thinking like, so when they reach those lows and highs, the price, right? When these people are expect it to move up, okay, this is maybe a just like a minor price like expansion, and it's just banks and institutions just like playing around, right? Because they're definitely not like always looking on those small time frames, right? On 1 minute. I mean, the banks are like really not scalping, right? On 1 minute, 5 minute time frame, because it's like they look on like the higher picture. They look more on the long term, right? And this is something. This is something that is misviewed, right? And it's something that I've discovered like not recently, some months ago. I don't know, but trading is not just this YouTube like promoting concepts or like stuff you see online on the front end, right? It's not just sunshine and rainbows, right? This is what I'm trying to say, because a lot of people get stuck in this space thinking, okay, I found a strategy, right? Fair, okay, let's put it like this, like liquidity sweep on higher time frame, inverse fair value gap on lower time frame, like that's it. But like again, like this is just like repeating historical patterns that you cannot know when they will repeat. But with like a real data, for example, level 2 data with the order flow, where you can actually see the numbers and see how much aggression there is by looking at like the market, the aggressive participants bubbles, right? For example, then you can make like more precise decisions, and then you can like filter out the bad situations in the market, But with a regular candlesticks, you just can't. I call regular candlesticks a delayed pattern, right? Because it just shows what just happened. It won't it can't show you like how much aggression, because based on just aggression and order flow, you can kind of like know what will happen next, right? But with just candles, it's just predicting the market based on some historical facts. And I think this is like the main factor that is keeping traders like where they are, like at the low positions. And also those TikTok stuff you see and Lux algo charts and indicators that are just coded into TradingView and then promoted. I mean, me myself, I think I bought like some indicator, some dipshit indicator 2 years ago that was apparently coded to give you buy and sell signals, and it just like wasn't working, right? I paid like what, $20, right? And it's all just nonsense. Like, how do you even code such a thing without having the access to like the level 2 data, right? It's like very very unconventional ICT concepts. And I think every trader should like step back from all those stuff, all those ICT stuff. I think every trader should step back and take a look into the reality and learn some real like data, right? Order flow and stuff like this. But then people like myself, they will probably ask, but I cannot find the data on the YouTube. I mean, yeah, that's basically like the reality, because what is on the YouTube when you type how to trade, the stuff that will show you on the YouTube are promoted to be there, right? The like you won't see the order flow on like a first result. You will always see those like shadowy humans, like people, and then behind them there is like a chart and $1,000 profit, right? And they will say something like 5 minute strategy on gold, scalping, make 20,000 a week, right? Retire your parents, and stuff like that. But this is just not the case, right? You cannot do this. To learn how to trade in 1 year is just simply like you can learn to trade in less than 1 year. So I think anyone who says like they've learned to trade in less than 1 year, I think this is just like pure nonsense, because you need time. This is like, as I said earlier, this is a very complicated, and it's a most difficult industry, because this industry actually combines all other industries on the planet, right? Because trading is the data from multiple like companies and businesses and any monetary stuff that is happening around the world. So people making sales, right? It's all written in trading industry. And I think trading industry actually collects all like, as I said, data from every business, from every business model, from every and everything that is out there. And I just stopped recording and I have to go combine those videos. So this is all I actually had to say for this video. Not very much, but just to spread some awareness, right? To not fall into this trap of ICT trading, even though some people are making this their strategy, but I don't know how, if it works for them, like, okay, no problem. But I just find this like too absurd to be a reality of trading, right? Like you can just put some boxes and lines on the chart. This is like your strategy, right? Because I know very well from the history of Wall Street and stuff like this. This is just too little to be like to to be like how can I say this? All those stuff are just not it, right? You get it. there's much more, and there should be much more into trading than just ICT concepts. Because if this was like the real strategy, then I think everyone would become profitable. But with the ICT strategy, I think it's just how gambling mindset you have to be able to withstand all those pressures from uncertainty by trading those concepts just because you lack data. So I think everything that is promoted on YouTube about these quick money schemes, it's just like dopamine, right? It's just dopamine spiking. It's dopamine maxing, and it probably won't help you on your trading career. And this is all I had to say for this video. See you in the next one.